Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, May 1st. There were several economic releases Thursday morning. We're going to discuss three of them. The first is the report on weekly initial claims for unemployment for the week ended April 26. It rose to 380,000 from 345,000 in the prior week. That is well above the expected 360,000 level, but it's still not all that surprising as it averages with the low level of the prior week to 362,500. That is not far from the 4-week moving average of 363,750. Claims have fluctuated around an average of 365,000 for a few months, so this is not bad news. Claims are still below levels that correlate with negative GDP growth and are not deteriorating as normally happens during early stages of recessions. The weekly news today is moderately bad, but the overall trend remains stable. The second report is the one for March personal income, which rose a slightly lower than expected 0.3%. March personal consumption expenditures were up 0.4%. That appears a bit higher than the expected 0.2% rate from economists' forecasts earlier this week, but this change was implied in the GDP data Wednesday, so it really should not be considered a surprise. The core PCE deflator was up 0.2%, which is also above the published expectations of 0.1%. But the GDP data Wednesday also implicitly includes this data, and it suggested a larger gain here as well. Overall, the data don't provide any significant economic indications following the GDP data on Wednesday. Nevertheless, the data do underscore the fact that consumer spending continues to rise at a steady pace despite lower home prices, higher gasoline prices, and dips in total payrolls. Also, the 0.2% core increase in the PCE deflator is not good news. It isn't all that bad either, as the index was up 0.2% 5 out of 6 months, with a 0.3% number thrown in before a 0.1% reading last month. It has averaged exactly 0.2% the past 8 months. The year-over-year increase in core PCE is 2.1%, helped by a couple of low numbers almost a year ago. Finally, the ISM index for April came in at 48.6 compared to a market expectation of 48. A number below 50 in this national survey on manufacturing conditions is intended to signal contraction. The April number isn't that worrisome when taking into account that the March level was below 50, yet the more telling industrial production number for March was up 0.3%. With respect to the April report, new orders were flat, while the order backlog, production, and inventories indexes were all up for March. The prices paid component of the report jumped to 84.5 from 83.5. All in all, this is another report that should quiet the alarmist talk about a serious deterioration in the economy. At worst, the market reaction to it should be muted. I'm Pat O'Hare for Briefing.com. Thanks for listening.